For this screencast, we're going to cover the bank reconciliation. Preparing bank reconciliations on a timely basis is a key internal control for every company, also a good idea for us personally on our own personal bank accounts. The bank reconciliation compares and explains differences between cash on the company's books and cash according to the bank's records on a certain date. Generally, for a business, you'll see this as of the end of a month. Before a bank rec's finished, the two sides need to equal the same amount. And we're going to walk through how a bank rec is prepared shortly. What I mean by two sides need to equal, here's the bank rec we're going to be looking at. We have an adjusted bank balance and adjusted book balance. Those have to be the same number before we're done. If they're not, we're not finished. We need to go back and do some more work. Okay? So what we need to prepare our bank rec, we need a bank statement from the bank. That can either be in electronic format or paper format. I generally, if I get it in electronic format, I would save it in a PDF so that I have a copy on my computer. Whether or not I print it out would depend on the client or the need. We also need general ledger for cash that contains the information from the same month as the bank statement. So that's going to be our books. All right. Here's the example of a bank statement. I've adapted this from an exhibit in your book. So we've got the company's name, we've got the account number, the statement date. This would be the period ending. So in this case, it's going to be for the month ended February 28th. We've got the previous balance from last month, minus any checks and debits, plus deposits and credits equal the current balance. And I've done some color coding here. You're going to see these color-coded items show up down in the bank reconciliation. Make it a little easier to trace it back and forth. Listing here, we've got checks and debits. These are items that will total up to the 723. Here we've got detail for deposits and credits. They're going to total up to the 1163.42. And here you've got a listing of the daily balance in the account for each day. Down below here is the key for some symbols that are used up above. A couple of them I want to talk about. Here, this is a debit memo. And I've made a note down here, debits decrease a bank's liability to the depositor, and they're reflected as a decrease to the business account balance. So debit memos and credit memos, depending on whose shoes you're standing in, they may not necessarily mean the same thing as the debits and credits that we're working with. Credits increase the bank's liability to the depositor, and they're reflected as an increase to the business account balance. I don't want to go into this too much in depth because it's kind of off point, but just from the bank standpoint, they're holding our money. And so if they were to enter our bank account balance on their books, it would be considered a liability because they have to pay that back to us. Okay, so that's why some banking terminology may seem a little bit different than what we're doing for accounting purposes. All right, so we've got debit memos, we've got a credit memo, we've got EFTs, electronic funds transfer. Non-sufficient funds, that's where a check was bounced. Customer gave us a check, we deposited it, they didn't have enough money in their account, and the bank returned it. So we're then going to have to pursue collections with the customer if we're going to get our money. All right, so that's a bank statement. Hopefully you've seen one of those before. If not, you probably get something that looks similar to that with your own personal bank statement each month. All right, down here is the general ledger. So this would be just an excerpt from our general ledger for the month of February. Shows all the activity. And this is the balance column format. So after each transaction, we've got the balance. And what I've done here, we've got the beginning balance, ending balance from last month, the 1609.58. And then we've got some transactions that happened throughout the month. Okay. And some additional transactions down here. And you can see that we've got some color coding going on down here because these are some transactions that are going to show up on the bank reconciliation. So let's take a look at the bank rec here. So we've got two sides to a bank rec. This is the bank statement side. This is the book side. The bank statement side, what we're going to do, we're going to start with the bank statement balance. And let's go back up here and look. That's where the 2050 comes from. So as of the end of February, the bank is showing that our balance is $2,050. Okay. Most cases, there are some timing items that we need to adjust for. On the bank side, the general timing items are deposits in transit, and you can see this coming from up here. This was a deposit on February 28th that didn't make it in and get on the bank's records until the next month. So it's not shown on the bank's statement. And you can go up there and verify. You basically have to cross-check what's shown on the bank statement, what's shown on your books. And you can see the last deposit on the bank's books is here on the 23rd, that $485. Okay, so it's not down here. So we need to get this as an addition onto the bank statement side. So we're trying to account for things here on the bank side that aren't on the bank statement that should be. Activity by the end of the month. Here we've got some deductions. We've got some outstanding checks, check 124 and 126. So 124 we can see here and 126. They're in our general ledger, but they're not listed up here. Okay, 124 and 126 are missing. They did not clear the bank by the end of the month, so we need to account for that down here. We've written them, they're February checks, they just haven't cleared the bank. So we need to deduct those from this bank balance up here. Okay. Once we've got our deposit in transit, our outstanding checks, 2,050 plus 145 minus 350 gets us to 1,845. And that's what we call our adjusted bank balance. I generally wait to do the double underline till I'm sure I'm in balance over here. But this is your adjusted bank balance. So it accommodates these items that were still not yet cleared the bank at the end of the month. Because what's in our general ledger rules? So if we've written a check by the end of the month, we need to account for it in that month, whether or not it's cleared the bank. Okay? And then we go over here to the book balance. This is where we reconcile our general ledger. So let's see where this 1404.58 comes from. It's coming from right there. So that's the end of our general ledger. That's our ending balance at the end of February. That's what's on our books right now. Then what we have to do, we have to compare what's sitting here in our general ledger, all these items, to what's shown up here on the bank statement. And there are a few items that are not recorded on our books, so we need to account for that. The first item is the bank collected a $500 note receivable less a $15 collection fee. So that $485 is shown up on here on the 23rd, but it's not on our books anywhere. We just didn't know about it. The bank collected it and we just didn't receive word by the end of the month. Okay, so nowhere on here is that shown. We've got interest earned. Generally, you're not going to know about that until you receive your bank statement. They calculate the interest at the end of the month and they add it to our bank statement. Okay, and we can verify, yes, it's here on the bank statement. It's not shown here on our books at the end of the month. So we need to add that in. Okay, and then we've got a couple of deductions down here. We've got a check printing charge of $23 that wasn't on our books. That's this debit memo up here on February 12th. So the bank charged us some money for printing some checks and we just didn't know about it. And so we need to add that to our books. We then also have this NSF check plus the service fee. Here, 20 is the NSF, $10 the service fee. And it was on the bank. It's not on our books, so we need to account for that also. Okay, so once we take the 1404.58 minus the 493.42 minus the 50 or plus the 493.42 minus the 53, we end up at 1845. Again, these two numbers have to equal before you're finished. Then you know you've done your bank reconciliation. And good practice is you prepare a bank reconciliation before you move forward and close your books and prepare financial statements for the month. You want to make sure that your bank balance is accurately stated. Okay. Now the last thing I want to touch base on is that we may need to make some journal entries to correct our books, to update our books. And journal entries to our books always come from the book side of the reconciliation. This is where we're updating our books, is over here. Doesn't come from, this stuff's already on our books over here. We don't need to do anything from the bank side. Always comes from the book side. So based on these items up here, let's see what those journal entries look like. So the first one, the first entry, we're increasing cash. So we're going to have a debit to cash, a debit to collection fee expense, and a credit to notes receivable. The next addition, we have a debit to cash. Again, we're increasing cash, and then we have a credit to interest income. The next two entries are decreases to cash. So you're going to see credits in both of those cases. The first one is a check printing charge for $23. I've debited printing expense down here and credited cash. And then the last one is this NSF check, which is a $30 charge. I'm going to debit accounts receivable and credit cash because what's happened, I've been assessed a $10 fee. So I'm going to charge that back to my customer. They need to pay the fee because their check bounced. You need to record these entries, and once you do, then the general ledger should equal the adjusted book balance. And that's a good double check. You want to make sure that your general ledger equals your adjusted book balance before you prepare your financial statements. That way you know you're representing an accurate cash balance. Hope this has been helpful. See you later.